I'm going to share with you the 5 biggest trends when it comes to Australian real estate, especially if you're considering buying your own home or investing in 2023. You definitely need to pay attention to this, so definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, before you sort of turn away and say, well, what the hell does this YouTuber know about the property market? I actually run a full-fledged buyer's agency. I've been running that for a couple of years now, but we've also helped over 200 clients do over 250 property transactions. So yes, we do know a thing or two when it comes to buying real estate in Australia. If you need more details around that, there's a pinned comment with my email, as well as the actual buyer's agency website. Now, in my opinion, 2023 is going to be a pivotal moment because you've got a return to somewhat a normal market. This is pre-pandemic market and I'm so excited for this. Why? Because we've pretty much been on easy mode for the last couple of years. Buy anywhere and it would go up. So for us as a buyer's agency, it was also not just focusing on what's the average price. We'll just do exactly what everyone else can do. We were always trying to look for new locations, look for new narratives, and also outperform markets, which we've successfully done for a lot of clients. So the value proposition was there. However, now what we've also seen is the rise of all these buyer's agents, and basically anyone that spends like 4 weeks doing a course comes on and says, hey, yeah, I can be a buyer's agent. But the problem with that is there's a lack of experience. And not only that, you've also come in on the back of the fact that, hey, the last couple of years was easy. I'm sure it's going to continue, but it's definitely not. And I'm very excited by this because what happens is in a market where you have things move sideways, you have some markets start dropping, that is what indicates a normal market. You see, before 2020, every state, every suburb had their own property cycles, which meant that you could go out and do some research on one suburb, but 2 suburbs across would be performing completely differently. And for us, when we go out there as part of our methodology when it comes to research, we're looking at every street. We're figuring out, is this street going to outperform the street across the street? You know what I mean? But the whole idea is to figure out, can we outperform the market and present the best results? Because the value proposition is there, especially for someone who doesn't have time. So these are the 5 biggest trends I'm looking at when it comes to 2023 and buying property. Number 1 is interest rates will cut in 2023 and you need to prepare accordingly. How you can prepare is to figure out what your borrowing capacities look like now and what they could look like if the rates cut by, say, 50 basis points or 100 basis points. This will give you further clarity around what your portfolio could look like in the next 18 to 24 months. Not only would I look at the borrowing capacity component, you may already be in a position where you've already bought the properties, or you've gone, hey, I've maxed out my borrowing capacity. What's 100 basis points going to look like for me? What you can do is now forecast what your cash flow looks like. And although most people aren't forward thinking, I'm hoping you, by being here, are forward thinking. And so what you could do is figure out in 12 months, if we go down by 50 basis points, and in another 24 months, we could go down by 150 basis points. What does that mean for your cash flow? And that could mean the difference between you borrowing an extra $50,000 of equity that you could then ultimately bring back and renovate the property. Or it could mean that instead of buying one property at say 600,000, you now have a borrowing capacity of 800,000, which means you can buy 2 in 2 different areas, take advantage of those cycles at 400K each. A complete breakdown of whether you should buy something that's affordable at 400K versus 800K. You can definitely go check out this video. It's a whiteboard finance video, so I break it all down and you can follow along. Number 2 is downturns are actually less severe and often shorter than what most people think. So let me break this down. When we look at markets for the last 100, 150, maybe 200 years, you can generally find the rule is that we have 9 to 10 years up, which is a bull market, and then you have 1 to 2 years of a correction. When looking at the Australian real estate market, you could probably say we're in the correction phase. And the last year was somewhat of a blow off top where things got crazy, there was FOMO pricing, but now we've been correcting. Now, all of the data coming out from say CBA, Deutsche Bank, as well as CoreLogic, they're all suggesting that the next 3 to 6 months is probably we're going to see the bottom of this market. So if we're going to see the bottom of this market in the next 3 to 6 months, do we wait 6 months and then buy? Or should we just be buying now? This will be a big trend this year in 2023 when you're trying to figure out what's the best move. I can bet my bottom dollar that this is how it's pretty much going to play out. That as soon as we're getting close to whatever the bottom looks like, and I would argue it's pretty much here, is that we would go through that phase, and then as soon as we realize property prices are starting to go up, the media articles are coming out as well, that's when we're going to start seeing a lot of the confidence come back. But it comes back at an exponential pace, and that's when you get a lot of FOMO behavior, a lot of silliness in the market. You'll start seeing the same shit that we saw at the end of 2021, which is where people were buying with no finance clauses, no pest and building inspections, and things like that. You want to avoid that sort of thing. So figure out what your cash flow looks like and figure out if you can get into the market, but understand that as we go through this year, the confidence will keep building. And when you feel like you're confident, chances are 99% of other people are also feeling confident at that time. Number 3 is normal markets will return. Now, yes, we're going to say it's the new norm, which is that, we've had a lot lot of people migrate out of capital cities and they may not return. But what I'm referring to here is that we're going to have immigration come back into the country to levels before the pandemic. And I would go on to argue they'll probably be higher than what they were pre-pandemic. And number two is you've got to realize that we don't have the infrastructure in many areas. So we're going to start seeing that uplift in government spending in all of these regional centers and regional hubs, as well as the smaller capital cities. This is very important because affordability plays a big concern when it comes to immigration, as well as for first-time buyers. Now we've also got different policies. Different states have different policies and they've got different price caps as well. Now this one is the one that I'm most excited about because the equivalent has been basically going out there and saying, well, I do all this research and everyone's making money. But yes, we're outperforming the market, but everyone's making money, right? That's the equivalent of going out there and saying, I've been training all my life to play football. And then I go out there and I verse a team that's under 12s, right? I'm definitely going to smash them, right? Well, I'd like to hope so. But now what we're doing is going out from easy mode and into the real main sport. And what you're going to find is those that are out there that actually have the technical skills, that have the research methodologies and the right structures in place to go out and execute and provide support to their clients are also going to get further ahead. So as a buyer's agency, that's exactly what I'm looking at, is how do we bolster up our research? How do we cross the T's, dot the I's? Because that's what we've been doing for the last 16 months. What we've been doing is refining the process, getting it to a point where we can not only just grow sustainably, but also provide more and more value to our clients. This is something that we focus on when it comes to the relationship building rather than being just a transactional based business. We can see it already in 2022 where you had Sydney go down by 11% and still people advocating, hey, this is a good buying opportunity. Whereas you could be in this market going out there making 13, 14% annual returns and then be coming back into Sydney and you would actually have doubled what your returns would be because you've got a market that's actually gone up relative to the property you wanted to buy went down. So net, you're probably further ahead by about 20 to 25%, not just the initial 13% you would have got as growth. Number 4 and number 5 basically go and mesh in together. It's that we've got a rental crisis, a rental issue based on the fact that we don't have enough dwellings. That is going to get coupled with the fact that demand's about to go through the roof. And as we start seeing immigration increase and flow through all of Australia, we know that this is often a leading indicator for when the next leg up of this cycle occurs. So in 2023, the conversations will turn from, oh my God, there's a recession this year, 12 months later to, wow, what a great year it was for property investors. Shame you missed out because you listened to an article I wrote maybe 8 months ago. Now that part was me being a journalist on one of those media outlets because I don't write. Instead, I come onto YouTube every week and wear a black t-shirt and giving you the disclaimer, which seems to be a meme at this point, but that this is not financial advice. What I'm giving you is logical steps that you should consider as part of what's happening in the real estate cycle. I don't believe we're going to have these prices collapse by 40%, and you should definitely check out my deep dive breakdown in this video as you go through and understand where you're positioned right now, what does life look like when it comes to investing in 12 months time, and as you can tell, I'm super freaking passionate about this. When you couple the passion with the fact that I am technically a nerd, you're going to have someone on your team that actually makes a lot of sense when it comes to investing in real estate. Needless to say, I'm very excited about not only these trends, but many more in 2023. The number one thing that I want you to focus on before any of this stuff is get your strategy right. Get your mindset right, because this is not easy. This is not about going out there, purchasing a property and saying, well, whoop-de-doo, I purchased a property. It's how do we maximize that first property to then leverage to go into the second, the third, and then ultimately build out a machine to get you financial freedom earlier. If you are interested in any of that support, definitely hit me up. There's a pinned comment with my email. And if you guys have enjoyed this video, smash that subscribe button and hit the like for the YouTube algorithm. I'll catch you guys in the next one. Thanks, guys.